The thing is, when we talk about the top 10 business loan common mistakes to avoid, here is a review that you need to keep in mind. The mistake number one, not knowing which business loan is best for you. See, the whole thing here is that there is an entire typology. There is an entire smorgasbord of loans, business loans, that is, that you need to consider. And if you are trying to apply for a loan, but you have no idea of the specific business loan that you're looking for, you're not going to get the loan. No question about it. I mean, a lot of folks get their business loan application denied and they're really pissed. But boss, credit is a game. And you have to understand the rules of the game to really know exactly how to win the game. And that's what we are trying to teach you in this show. So the very first mistake that you need to absolutely avoid is to ignore the business loan that you are looking for. So what are we talking about? When we talk about types of business loans, you have a constellation of credit products. You have SBA loans, you have short-term loans, you have long-term business loans, you have bad credit business loans, you have secured business loans, you have unsecured business loans. Okay, you have merchant cash advances, you have equipment financing arrangements, you have invoice factoring arrangements. So you got to have a clear idea. And the thing is, sometimes when you take the time to educate yourself on the type of loan that you're looking for, you might realize that, hey, listen, I thought I needed a line of credit, but after studying the whole thing, I'm just realizing that I need an unsecured loan instead. Or I thought I needed an unsecured loan, but after studying the whole concepts, I think I need a merchant cash advance. So this is really important. So once you have, and they always say information is power. We believe information is not only power, but information is wealth. So once you acquaint yourself with the type of loan that you are looking for, then now you need to start the evaluation process. You need to look at the way you can be eligible. Okay, you want to look at the criteria for qualification. You want to look for how much you can qualify for. And you want to see whether or not they are charging any fees, because they have those admin fees. Sometimes those lenders, they charge a package fee, whatever it is. But yeah, they do have fees. And you want to see also the APR. So mistake number one, not knowing which business loan is best for you. Mistake number two, choosing the wrong small business lender. By the way, welcome back to the show. Really appreciate having you here. It's just always a pleasure to actually talk to you. And so the mistake number two is choosing the wrong small business lender. And this is really important also because this goes back to what I said earlier. If you have no idea of the kind of loan that you're looking for, chances are you're going to pick the wrong lender. So everything starts with having the right business loan, so that once you have the right business loan, you can direct your attention to the best in the industry when it comes to those loans. For example, if you are looking for an SBA loan, once you are completely sure that you are looking for an SBA loan, then you can maybe go and Google, or you can maybe go to our website here, to our channel, our YouTube channel, so you have a clear idea of the best SBA lenders in the country. Okay, this is really important. And when we talk about choosing choosing the wrong small business lender, it actually comes on, it really manifests itself in various levels. For example, let's say you are with a bank. You have had a relationship with one bank for the last 10 years. They know you, you know them. Okay, but you think that they are so small that they cannot actually accommodate your $250,000 business loan that you're looking for. So because of that, you actually leave you leave them alone, but you go apply for a business loan with Chase. But you have no relationship with Chase. You do have a good credit score though. Okay, but you have no relationship whatsoever with Chase, or if you do have a relationship, that relationship is minute at best. It's minor at best. What do you think is going to happen? Your chances of being approved for a business loan at Chase, if you don't have an existing relationship, are slim. It doesn't matter whether you have an excellent credit score. I mean, Chase, they are a colossus. Okay, they don't care about your credit score. They do care about your credit score, but they do care more about your relationship with them. Okay, if you're not parking some of your cash with them, why should they park some of their cash with you? I mean, it has to be a win-win situation. So what I'm trying to say here is that it would have been a lot better to go to your small town bank and see if you can qualify for a loan with them. You might be thinking they're small and that they will not be able to give you the loan that you need, but you'll be surprised once you start talking. Once you start having a conversation and you talk to the right people, you realize, hey, listen, I think they also have a big balance sheet and they could accommodate me. Mistake number 3, rushing the paperwork. Oh yeah. Just want to quickly remind everybody of today's topic. I'm talking to you about the top 10 business loan common mistakes. Okay. And so rushing the paperwork is a really a killer mistake. The thing is, you want to apply for a business loan, but you're not taking the time to assemble the paperwork. You're just rushing everything. You're disorganized. What's up with that? This is really bad. If you are in that category right now, if you are in the category of borrowers who are not organized, who rush the paperwork, I want you to stop that right now. I want you to stop it, because you're wasting your time and you're wasting the bank's time, and they are going to deny your ass anyway. Okay, so what we are trying to have here, we are looking for method. You want to be methodical. You want to be logical. You want to take your time. Okay, if you need to assemble your business tax returns, take the time to assemble together your business tax returns. If they ask you to provide your personal tax returns, take the time to gather your personal tax returns. If they ask you to provide your business financial statements, take the time to assemble that data. If they ask you to provide your legal documents, your articles of incorporation, your articles of organization, your licenses and permits, and what have you. Whatever they ask you, take the time to gather the information. Mistake number 4, going through the process alone. Okay, in other words, you are failing to seek expert advice. The thing is, if you are trying to get a loan for 25 grand or 10 grand, then it's okay. You can do it yourself. Okay, not a problem. But the thing is, if you are trying to get a loan for $1 million and you realize that you don't have the intellect, the expertise in-house to sort of tackle that big amount, why don't you just hire someone to kind of help you out? Yeah. This is a good investment, because basically you can write off that investment anyway on your tax return, but you want to speak to someone who has been through this before, who has done it successfully, and who can help you out. And this could be a loan expertise provider, and this person can help you write the business plan, create your financial statements, advise you on what kind of lender you should apply at, what kind of loan you should go for. So those are very valuable pieces of advice that you might need. So do not go through the process alone, especially if you are looking for a big ass loan, business loan. Mistake number 5, being unprepared. This harks back to what I said earlier about rushing the paperwork, right? So being unprepared. In other words, you are basically applying for a loan and you don't have actually your information in order. So you're basically scrambling to get that information in order. So you don't have your business contact information. Okay, so your business contact information is not ready. The business legal paperwork, the business plan, you don't have a business plan. What's up with that? This is a big no-no. This is a big no-no. Big no-no. One thing you need to understand here is that it takes time to write a business plan, though. I mean, you're not going to write a business plan, a legit business plan, a compelling business plan, a sizzling business plan, a captivating business plan. You're not going to write that in one day. It ain't happening, boss. I don't care how smart you are. And that's even worse. If you don't have the expertise to actually write your business plan, and you're going to have to rely on a third party, on somebody else, you better really take time in advance. You want to start the whole process 2 weeks in advance of you applying for a business loan, or even a month. I mean, for our clients, we do this like 3 weeks in advance. 3 weeks. So when we talk about being unprepared, we're speaking about your expense documents not being ready, your financial records not being ready, your your payroll reports not being ready, your tax returns, personal and business not being ready, your utility expenses not being ready, okay, your rent mortgage information not being ready. So a whole smorgasbord of information, pieces of information that is not ready, and you just scrambling to gather all that information. That's kind of crazy, especially when the loan amount is kind of high, and that level of disorganization is unacceptable. Definitely. So if you are in that category right now, I'm saying once again, I want you to stop that. You want to stop that procrastination. You want to start the whole process a little earlier on. You want to be more organized, okay? And the thing is, when you apply for a small business loan, all business paperwork and financial information have to be up to date, because your lending file should highlight your ability to pay the loan back promptly. And if the lender sees that you're not even organized when it comes to gathering your loan application paperwork, why should they trust you by giving you money? Because you're not able to manage even the basics. How would you be able to manage something more complicated than that? Mistake number 6, not checking your credit history beforehand. Wait, this is the big one, okay? And I just want to quickly remind everybody that today's topic, we're talking about the top 10 business loan common mistakes. And so mistake number 6 here, not checking your credit history beforehand. Now, when we talk about checking your credit history, we're speaking about two things. Your credit history can be your personal credit history and your business credit history. So you have two levels here. Let's start with your personal. So when we talk about your personal credit history, we're talking about making sure that you don't have any derogatory items. So you need to have you want to see exactly what the lender is seeing in your Equifax credit report and score. You want to see exactly what the lender is seeing in your Experian credit reports and score. You want to see exactly the same thing for your TransUnion credit score and report. This is important because you want to make sure that you are on the same page with the lender when it comes to checking your credit information. That's at the personal level. Let's talk about the business level now. So similar to your personal level, your personal credit history, your business credit history, actually you can check that through 3 credit bureaus. The only difference is that TransUnion does not have a business credit reporting department. So for a business credit, you have Experian, you have Equifax, and you have Dun & Bradstreet. But the process is similar. I mean, the analogy here means that you have to track. You want to contact those players and make sure that you have a clear idea about what's really in their files about your business. Okay. The only difference here is that when we talk about checking your credit history beforehand, and when you check your personal credit history, you're not paying for it. You don't have to pay for it. But when it comes to checking your business credit history, you might have to pay for it because things like free business credit reports do not exist. Okay. And so the bottom line here is what? If you see anything derogatory, if you see anything adverse, if you see anything fishy, if you see anything not right, then you need to start the dispute process. And you have to do this way before you apply for a business loan. And I don't care if you're applying for an EIN only business loan or a business loan without EIN only. You still need to fix your personal credit score because you never know. The lender might say, you know what? We want to check data beyond this loan application. And if you have an EIN only loan application, the lender can still choose to check your personal credit score. They'll let you know anyway, but if that's what they want, they will do it. Mistake number 7, not checking your cash flow. Oh, that's a big one. That's a big one. You know what? That's a big one because the thing is that if you are trying to get a business loan, you want to make sure that you have a capacity to pay back the loan. This is a mistake that a lot of small businesses make. In other words, you are trying to apply for a loan, but you have no idea whether or not you have the wherewithals, or you will have the wherewithals to pay the loan back. And when we have a conversation about business loan repayment ability, we're talking indirectly or directly for that matter about a statement of business cash flow. Okay, so your statement of cash flows, that's the right word here, the right terminology. So your statement of cash flows tells the lender whether or not you will have enough liquidity to repay the loan over the loan term, over the tenure here. Okay, so let's say 5 years. So the lender might ask you to actually prepare a projected cash flow statement over 5 years to see whether or not, again, you will have positive cash flow. So when we talk about cash flows, we're speaking about three main categories here. We're speaking about cash flows from operating activities. We're speaking about cash flows from investing activities and cash flows from financing activities. And those three elements, this trifecta is really important. And this is why we always tell people sometimes you want to borrow more than you can afford to repay. And this is a rookie's mistake, really. This is basically what young entrepreneurs and rookie entrepreneurs make. That's the kind of mistake they make, and they get denied, and then they're pissed or whatever. No. So you always want to be conservative. I know you need a business loan. That's why you were applying for a business loan in the first place, and you were looking for something massive. But the thing is, you're looking for something massive, but are you ready? Are you ready to make massive repayments every month? Yes, no, depends on you. But if you're ready to make massive repayments every month, then yes, then that's fine. You can apply for a business loan with a massive amount. But if not, I want you to dial down your expectations when it comes to business loans. And you want to go for a number that is more realistic, a number that is more in line with your expectations about how the industry will fare, how the business will fare, and similar sort of predictions. Mistake number 8, not having a solid business plan. This is such a big mistake that I was just talking to. I was alluding to this earlier when I spoke about just having a cheap ass business plan. The thing is, not a lot of entrepreneurs have the expertise or the creativity, for that matter, to write their own business plan. And what happens here is it's very laughable, but it happens. This is for real. People go on the internet, okay, and they go on those websites that say business plan template. And what they do is they just download a template. They look for their industry, their geography, whatever, and they just download a template. Now, remember, this is a template. So everything on that template is generic. So what they do is they basically just change the logo, they change the name of the company, and that's it. It is really laughable because the lender, when they see that kind of business plan, they just throw it in the ash can or in the trash bin. Okay, they don't even read it. You know why? Because if you want me to approve a $100,000 business loan for you, and you're not even able to take 2 hours of your time, or 1 day of your time, or 2 days of your time to write me a customized business plan, then you're not worth my time. You ain't worth my time. Why should I just bother? And again, and here you have you want to keep a story of rejections and denials because you're not taking the time to do things right, and you got to take the time to do things right. And this is something this is so important because it really sort of informs the decision-making process at many banks and credit unions. When they see that you are paying attention to the whole application, they take you seriously. So take the time to write a compelling business plan. Very quintessential. Mistake number 9, having too many loan applications. This is important because when a lender sees that you are applying for many loans at the same time, this could actually signal desperation, lack of financial management. In other words, you don't know how to manage your money, and your business is really not afloat when it comes to cash. So you want to be very strategic when applying for business loans and business credit cards and all other business credit products. Mistake number 10. This is an important mistake also. Failure to shop around. The reason why this is important because you want to, if you remember, when I started this conversation, I was just talking to you about the fact that you have a constellation of business loans, right? So, and I was just talking to you about that not knowing which business loan is best for you was the number one mistake. So now that we have agreed that there are different types of business loans, you need to shop around. Once you actually zero in on the type of business loan that you need to shop around to find the best provider of that specific type of loan. Okay. And the thing is, when it comes to that, you want to actually pit your local bank against your local credit union, against online lenders, against alternative lenders, because you really want to make sure that you're getting the best deal in terms of APR, in terms of loan amounts, in terms of repayment conditions, in terms of the fees that they're charging you. Okay, this is really important. So take the time to actually shop around, and you want to actually go for loans that allow you to do a pre-qual. In other words, you want to do a soft pull, because at the end of the day, you want to conserve, you want to preserve as much as possible your FICO score. Okay, because if you're not applying for a business loan or business line of credit with EIN only, then you need to make sure that your FICO score is preserved. Okay, and one thing you also need to do here is that you want to be in a situation where you're constantly taking notes. In other words, what I'm saying here is that once you decided, let's say you decide, for example, that you are looking for an SBA loan. Okay, then you want to write down the top 5 SBA lenders in the country. Then from that, you want to start having a conversation about which lender is best for me based on my situation. It could be based on my economics, my company's economics. It can be based on my geography, the company's geography, where the business is located at. Okay, and you can think about your relationship with the bank. If it's a bank, if you have an existing relationship with them, this could help. So shopping around is really quintessential. So it's important to always start at banks where you already have a relationship. Before closing today's conversation, let me give you a few pro tips. Okay, so how do you actually apply successfully for a business loan? Because there is a formula, there is a code that you need to follow if you want to apply successfully for a business loan. One thing you want to do here is that make sure that you have at least up to 3. You want to have at least 3 years of financial statements or tax returns. Okay, here I'm speaking about how to apply for a business loan for an established company, not for a startup, because there are different rules and conditions. There are different approaches for startups. Here I'm speaking about established businesses. So you want to have at least 3 years of financial statements or tax returns. And when I'm speaking about information, when I'm speaking about financial statements, I'm speaking about your balance sheets, your company's income statements, your company's stockholders' equity. You want a statement of stockholders' equity, and also your company's statement of cash flow. So there are 4 primary financial statements. The one about equity, stockholders' equity, is not really mentioned that much, but it is a quintessential statement. Okay, so you have the 4, but when it comes to your business tax returns, this could be your 1065, your 1120S, your 1120. It depends on your legal structure. And you also want to provide at least 3 months of bank statements. Okay, and of course here we are speaking about bank statements coming from your business checking accounts. Okay, not your personal. We're not speaking about anything personal here. And some lenders want to see your accounts receivable reports. They want to see exactly what's really happening in terms of your revenue. Because remember, when we talk about a business loan, the lender is primarily interested in your ability to repay the loan that you just got. So accounts receivable will constitute an important criterion when it comes to evaluating that ability. And also, you want to provide proof of ownership. So this actually harks back to what I said earlier about the fact that there is a 4th financial statements called statements of owner's equity. What the lender is going to do here is that the lender is going to reconcile the data in your proof of ownership with the data in that specific financial statements, because that statement actually informs every reader about who owns the business. This is why it's really important. Okay, so always make sure that you have those 4 or 5 elements ready when you apply for a business loan. Thank you so much for your attention. I really appreciate it. Let me quickly do a recap here. I was just sharing with you business loan common mistakes, the top 10. So we have number 1, not knowing which business loan is best for you. Number 2, choosing the wrong small business lender. Number 3, rushing the paperwork. Number 4, going through the process alone. Number 5, being unprepared. Number 6, not checking your credit history beforehand. Number 7, not checking your cash flow. Number 8, not having a solid business plan. Number 9, having too many loan applications. And number 10, failure to shop around. Thank you so much for your attention. I really appreciate it. God bless you. I will see you next time. But until then, remember, stay marvelous.